Good morning, everyone. It is Friday, November 5th, and this is Morning Market Movers, where we look at hotspots in the market for today and we do some live analysis for day trading. I am Todd Rich. I am with Nadex. With me is Brian Caprice from Keep Trading Simple. So, good morning, all. Before Brian and I jump into our peek at what's going on in the markets, and there was some news right before the open, so right before the session, so we will definitely be talking about that. But I do need to share that trading involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Now, before I start, I am going to drop in this link again. This is for next Tuesday. I want everyone, if you haven't registered yet, I'd encourage you. IG is having a free virtual education event. It's going to be around FX trading. We are going to talk a little bit about the foreign exchange markets today. So if there's going to be some great speakers, take a peek. Brian is going to be speaking there, and we've got some other great speakers speaking for that IG. So I did want to put that out there. Now let's take a peek at what we actually have going on this morning, and this is what we're going to be talking about today. We've been waiting for this, and here it was. Non-farm payrolls came out and the unemployment rate. The central banks, and we'll probably discuss this a little bit, and they're trying this balancing act between the, they're balancing inflation pressures with challenges in the labor market, and I know that some people would like to really see some people like to really see the central banks start being a little bit more aggressive. I know they're being very measured in their approach, but their concerns are we out of these labor market problems? Are we out of the pandemic problems? And well, today's non-farm payrolls, they were looking at it coming in at 450,000. That was what economists were predicting. Yeah, they came in at 531,000. So clearly companies in the US are adding more. It's not as fast as it was early in the recovery, but we have a significant uptick. Unemployment rate ticking down slightly. So, I'll let Brian talk about it, but clearly there's, the news is good here. When are they going? When are the central banks going to start to look to tackle the inflation? And I know they've announced it. The question is are they going to do something fast enough? Interestingly enough, and here's a 15-minute chart of gold. Gold did make a little bit of a wild ride this morning. I mean, I think it was about 12 range. It spiked way lower, rallied all the way back, bouncing around. Gold, people didn't know what to do when they were looking at gold. We'll certainly take a look at gold, silver. We'll probably take a peek over at the Euro USD. I think Brian, nothing much going on in oil, which is rather interesting. And equities are all looking higher
Zero.
this morning. So, yeah, let's get into it. Sorry, that was a little bit of a longer open because we had a lot of things. We got that IG event, which I believe starts at 11 a.m. Eastern on Tuesday. That
I
will
think
be
that's right.
recorded, so be sure to register so you'll get the recordings. Plus, there's a bunch of, I think they're giving away some freebies. So I'm teasing that out there too. Register and you'll get access to the goodie bag. All right, so Brian, let's talk about unemployment, non-farm payrolls, and take a peek at how that has impacted the markets this morning and what else we could look at for this Friday.
Yeah, I mean it's obviously the ideal scenario for Friday. Again, had we not had the FOMC meeting with kind of lack of any really true substance on Wednesday, or like really any motion, I think this would have been an absolute blowout. And again, there would have been a lot more questions about how hard are they going to hit us with the the kind of interest rate change. As I mentioned to you minutes ago, I have absolutely no idea what they're looking at. I don't know how they're showing that the labor market is weak. I mean, blew these numbers out of the water. The unemployment rate, again, I said, this doesn't matter to me. This is not an accurate reading of what's going on right now. But I mean, this non-farm payroll number not only was supposed to be a huge jump from last time, there was no revision and it is even higher. So again, it looked even better than the ADP number. So, average earnings came in the same. There's really nothing negative about this report at all. And we've heard that they're going to start tapering at a slower pace. Wall Street should love this. They're getting more people working. Their productivity is going to go even higher. They're going to make more profits. And yet the Fed is not doing anything with interest rates. And again, more people making money, more people spending money, more reason to raise for inflation to go higher. So I don't know. Inflation is one of these things that I guess that, they just don't care about. So, if you guys are tired of hearing about inflation and being transitory and everything else, I have news for you. You're going to hear a lot about it next year at this time when the elections come up. We're going to hear about what gas was 2 years ago. We're going to hear about what food was 2 years ago. We're going to hear about what labor was 2 years ago. We're going to hear about all those things. And in particular, with inflation going as high as it is, there's another thing you guys are going to see. Okay. A lot of people got checks back from their health insurance companies this year. Why? Because we didn't use the benefits because nobody left their houses, right? Guess what?
Yeah.
Next year, instead of us getting a check, all our premiums are going to jump because, again,
of course,
it works the same way. It works exactly the same way. We're not going to get a bill, right? We're not going to get additional bill, but this is what inflation does. So it's here. But overall today, what can we do with this? This should all be great news for the market. I mean, it's kind of those scenarios. It's we were talking about, is it too good? And that's why it's negative. At this point, it doesn't even matter. The Fed's like, nah, it'll go away. It's. I know it's going to be hard. I mean, Powell's statement was, it's going to be hard for a few months, but it's fine. Just deal with it. No problem. But, I mean, this is just unbelievable. So
they're being very measured. They're being cautious. They're trying to broadcast everything they're going to do. I appreciate that. They don't want to be caustic and bombastic and shake things up. But then there's the risk of going too slow, right? Because that inflation is it hurts. I mean, I'm feeling it.
Yeah, I mean, the reality of the market is, I mean, while that's a nice theory, right? That it's like we don't want to be too inflammatory. What happens every single time we have earnings? It's the same exact thing. It's how the market works. Trying to change it and make it something that it's not is only going to make it worse. And what you're seeing is you're going to see that the inequalities get even worse with it. So, gold is a perfect example. Yesterday, I would like to point out that lately we've seen the cryptos are the ones that have been crazy moving, right? Inflation, everybody goes into cryptos. Yesterday was a bit different. The cryptos went down yesterday when gold and silver went up. This is the gold chart right now. And we talked about it bouncing off that 1800 because that's a major psychological number. And it did. It bounced all the way down. It was about $10 lower. Right now in the spike, it went all the way down about $15 lower from that 1800. But we're seeing it cycle back over. Now, gold right now is basically flat. People are like, I don't know what to do with this. Is inflation real? There's so many questions that the market has. Like, what are they seeing that we don't see? How can the numbers be this great, but you're telling us that this inflation is not real and it's all going to go away? And even the cryptos are totally confused right now. The cryptos are up 0.12, and then
confused
Ethereum
about
is down
those in
0.8.
general. So
yeah. So it's one of those things. I mean, if you're taking all the great data out, looking at this right now, this is set up more for a technical short, right? We have this big area. We've already spiked it, so they've cleaned any buyers and sellers from that entire area. Again, inflation doesn't seem to matter. This is set up more for short, rolling back from this 1800 and probably heading down into this level down here at the 1775 level again. Should it be higher? Is it a justifiable reason for it to be higher? Absolutely, right? With everything looking the way that it is right now, it has every reason to be higher. But on a technical basis right now, again, this is more set up for a short than anything else. And it's just a continuation from yesterday. You can see in the overnight, the Europeans spiked it right up to 1800 right here. The candle that it touched was actually 4 a.m., not 3 a.m. But you can see they literally have taken it from that same exact level. And here's what the Europeans did in the overnight market. Right, there's your short, and your 3-to-1 is sitting right there. Actually, right where the 1 to 3 actually triggered right when the news came out this morning for non-farm. Not a coincidence. But I would say right now, again, it's more set up for a short. And again, I would say that that's what we're seeing in gold. In silver, we're kind of seeing the same thing. And yeah, I mentioned oil. Oil has no idea what to do with this. Right. And This is funny because yesterday we talked about it being up, running into some sellers, and it was down. And yeah, it was a huge down day, all the way down to $78. Right. This is what we've done today. Yesterday was $2.80. Oil
Nothing.
90 cents in
80.
the entire market, and it is closing right exactly where it was opening at 3 o'clock.
And they're telling us that there's going to be demand. I mean, they're hiring more people. Companies are firing things up. And
500,000 more people are going to be driving to work now. And oil's response was, I don't care, whatever, no big deal. So again, it's what are we not seeing? There's data out there. So, is oil going to be the big mover today? I think oil will pop. I think once the U.S. traders gets in, they're going to be like, wait a second, there's 530,000 more people this month that are working. That's demand. I mean, that's legitimate demand. There's no joking about that one. The unemployment, again, I don't care about that, but 530,000 new jobs, again, that's a lot more than expected. This is higher demand. Remember, OPEC says, the demand's not going to change at all. We see. So
well,
OPEC is aware
and they're panicking right now because it's below $80 a barrel.
Yeah. So that's the thing. They're like, oh my god, it went below 80. But look at this. The jobs are great. So yeah, I think oil is a buy today. I think finding an opportunity in oil would be decent. Again, does it need to pull back first to do it? I don't know. Again, we're getting to the point where that the retail trader is really starting to come online now, particularly on a non-farm day. And again, it was all great news. And again, that should help drive us higher. And I think the other story is going to be equities today. VIX obviously is driving down. Now that the uncertainty is out, it is driven down. And being positive, it's not like the world is ending with a whole bunch more people getting paid. Again, I would see the VIX coming down, and you're seeing all the indices right now are spiking, as they should. I mean, they're all up. And again, we typically look at this on a 15-minute chart. You're seeing all these kind of spike highs.
And that's the Dow, right?
That was the Dow, yeah. Russell would be the one that takes off the most. And again, you see that has the biggest spike there. Yeah, I mean, they're all basically the same. And this one had a little bit of a pullback, NQ at that last little moment. But NQ is the weakest, I would say, right now. So, really, when we talk about Feel Good Fridays, a non-farm payroll blowout. And again, there's not a lot of uncertainty associated with it today because we just had FOMC 2 days ago, and they said we're going to start tapering at a slow rate because, again, transitory inflation, all the discount, I'd say disclaimers, but at this point, God only knows what you would actually call it. It's one of those days where I would be looking for pullbacks today, whether you guys are going to use pullback, use it like a tool like a fib. Everything is really, really positive. And right now, they're not moving in crazy amounts, but the retail trader hasn't gotten in there. So, I mean, hopefully, this is what I'm hoping for, is that we can get a little bit of a pullback to get a little bit cheaper price and then figure out how to get long at the open. Because all the news is definitely good today. And I don't think there's anything else. Yeah, there's a CAD report and then again the currency report. We're pretty much done as far as news goes for the day today. There's nothing really. Consumer credit is that's not gonna be a big thing. Probably shouldn't, and that's at 3 p.m. So yeah, it's all positive news today. Today is one of those days that you typically like. That should be a slow and steady higher. A lot of the pop has already occurred. I would expect a pullback at some point. Again, all the people that got in pre-news for this, they're gonna, again, they got to start selling to take their money out. Question is this kind of pullback? Is that the pullback for the day? But I would say look for your big psychological numbers today. I mean, obviously we've blown through 36,150 at this point. I would say in YM, I'd look for 36,200 today. That should be an easy. And I would say 36,200 and 36,300 are probably both on the radar today. If we go up and look at the, I got to do it this way. I got it. Where is it? Average to range.
There it is.
330 is what the average is, right? So even if we take the spike from what we just saw, that's about 130. 330 puts us right here. So could we hit 36,300 today? It's in the cards. That's a standard ATR. That's not even a crazy move. And right. non-farm data being this high, being as big a release as non-farm is, I would say it's on the books today. So I mean, I feel like I feel like 36.3 is on there. This one is 45 or 44. If we take this spike, whoops, not that one. Let's close that one down. Let's see what we got over here. Kind of the same thing. So we can go all the way up to 47.30, but even on a conservative basis, we only move 40 pips instead of 45. We have 47.25. And it looks like a huge move, but that's what the averages tell us.
We're at all-time highs, but there's a reason why we're up here, and the news is certainly encouraging.
Yeah.
Right?
Yeah.
So,
and like I said, gold is retreating a little bit. Silver is definitely retreating a little bit. When you're looking at the dollar spike because they're like, hey, this is great for us. But right now, we know that their inability to really change anything has really been the linchpin. And again, even in the currency markets, I mean, you're not really seeing there's a push. But the problem with the euro dollar right now is the euro dollar is now pushing back into an area that we have higher time frame buyers. So, again, it's great that it drove into there, but this
Right.
is big buyers on this time frame. Can it blow through? Sure, it absolutely can. But the question is, are they going to have enough power already? I mean, it's already moved. That spike so far has already been about 35 pips and stopped. Okay, why did it
Right.
stop on great news? And again, we're seeing green. It's because it's a larger time frame area of buyers that it's got to jump through. I would say, I mean, the bigger ones for the day. I mean, here's the pound dollar from yesterday. We talked about that level of a break of 35,000. It did. It broke. It pulled back, and then it really got slow, and then triggered, and then went lower and just blew it out. It covered the entire racetrack move down, and then again, the pound yen. We talked about the same thing coming through, and again, we could take a confirmation either way. It came low, it confirmed up, and then can push lower. There was some news about that. We didn't cover it, but and again,
Yeah,
you
that's on the
may not have known.
that's pound news versus dollar news.
Yeah. The pound news was the UK did not invoke Article 16. You may say, "What the heck is Article 16?" Which is really, really funny because that was the first that was the first comment over here on Forex Factor. What is Article 16? Basically, it was a provision. It doesn't necessarily matter. You can go out there. There's a lot of things out there for it. It was a provision that if they hit hard financial times because of yada yada yada, they could renegotiate the Northern Ireland fish treaties or whatever it was. The big sticking point for Brexit. The reason why it went like 6 months
And they're
longer.
not doing it.
Yeah, and they didn't do it. So I think the market wanted that because they're like, listen, we just went through COVID. You're saying that we don't need to renegotiate after, and they didn't do it. So again, it's kind of an interesting stance. But again, the Bank of England, if they're seeing that, I think that's a very strong stance for them. The market wanted them to take the easy way out, but they didn't do it. So, the pound is the biggest mover, but it's already starting to get eaten back. You can see here in the 60-minute, it's already starting to reverse both the pound dollar and the pound yen. I'd say if you're looking for some action today, there may be some movement off of that one as people are trying to, basically go back and sell the dollar.
Right.
Yeah. But overall, I would say it should be a positive day. I would say Feel Good Friday's probably in there. Some of these big names that are already higher, like Tesla, should be, again, it should be a good Tesla day. Apple, you're seeing, is already starting to roll up again. So, I would say look for your pullbacks. In the indices, there will be some profit taking. But overall, it looks like a Feel Good Friday is in. And again, I'm curious to see some of these, the new highs that we're hitting here. So,
Yeah.
like I say, it seems like it's really, really far away, but it's within a standard,
it's really
standard
not.
average.
Yeah. It's really not. So with that, any questions for Nadex, please email us, customerservice@nadex.com. Any questions for Brian, email him at support@keeptradingsimple.com.
Yeah.
And the top line news really that we covered today, non-farm payrolls absolutely blow it out. Unemployment rate in the US creeping a little bit lower, sort of contra, or at least maybe it's not contra. Maybe it's sort of satisfying some of those concerns of the Fed. They're trying to balance that labor market versus the inflation.
I don't even know.
We know inflation is a problem. They're going to have to do something with it, and I know they don't want to be disruptive. But if we're clearly heading in the right direction with unemployment and with adding people to the payrolls again, and everything's looking good. Maybe the Fed, we'll have to keep an eye on them if they decide they're going to start speeding things up again. They're very measured.
And natural gas there is
too. Optimistic versus pessimistic. Do they go too fast? Do they go too slow? And I don't know. We'll see how it goes. With that, I do want to let everyone get ready for the open. It is looking for a green open across the board on the equities. And enjoy your weekend. Stay safe and good luck in the markets, everyone.